Good morning, everybody. How's it going? It is 8 a.m. Central Standard Time, Costa Rican time, on December 21st, 2018. And this is a reminder to follow your rules and trade your plan. Economic reports before the bell. Quadruple witching today. And update, we will not be on Monday or Tuesday of next week. So that's Christmas Day, obviously. Markets close, and I think Christmas Eve, I think there's a half day. So you can still trade it if you'd like, but so I'll see you guys after today on Wednesday. I'm probably gonna not even trade past the open here anyway. I'm just gonna enjoy the day, but let's go ahead and move into it, and then I'll take any questions that you guys have for me. Trend biases, guys, of the prior day: bearish Nasdaq, ES, Dow, and Russell. On the shorter term, midterm, and longer time frame, we are bearish in every index on all of those time frames. Economic reports, 4:30 a.m. before the bell, we had Great Britain current account, and then the Bank of England quarterly bulletin at 7 a.m. East Coast time, 8:30. Core durable goods orders, and then the final GDP numbers. After the bell at 10 a.m., core PCE price index, consumer sentiment, and personal income spending. At 11 a.m., Kansas Fed manufacturing activity and the Baker Hughes rig count. For our previous day's summary in the S&P 500, we got the bell to bell high here. Let me back this out. Bell to bell high up at 25.12 with the bell to bell low at 24.41 half. The settlement was 24.86 quarter, and value area high came in at 24.98. 24.98 quarter. Point of control 24.72 half. Value area low 24.64 quarter. European close 24.85 half, and volume was 3,351,000 contracts. 3,351,000 contracts. Overnight high in the S&P 24.92 quarter. The overnight low down here at 24.67. Floor trader pivot point support and resistance levels. Crazy how freaking wide these are. R4A 26.27 quarter, R3 25.88.75, R2 25.50 half, R1 25.18 quarter. And then down here 24.47.75 is S1. The pivot point is 24.80. S2 24.09 half, S3 23.77 quarter, and S4A 23.45 quarter, with S4B at 23.06.75. Range analysis, guys, 70 points in the prior day, another big one. The median's been 60 roughly. Session was 76 half, median 61, overnight 42, overnight median's been 33, and first hour 27.75. So range expansion across the board on every measurement we look at. Index strength, Dow weakest market, down 1.3%. The Russell was down 0.7%, Nasdaq down 0.4%, ES down 0.7%. Over the last 5 days, we have declines of 6% or greater in all 4 indexes. Talk about a move down. 6% move in 5 days over a 10-day period. All markets actually year to date now are down on the year. So we are going into the final days of the year here. Let's see, I don't know how many more trading days. We got basically Monday is a half day, so call it Wednesday, Thursday, Friday. And then I also think New Year's Day on the 30th. I think New Year's Eve might be a half day, but I'm not positive. But like call it 3.5, 4 days left of trading in the year with all of these markets down. Pretty interesting stuff. It's been a while since we had a down year. in any of these markets. So let's go ahead and take a look. Where are you at? Nope. Here we are. All right. Moving into the day here, we'll talk about resistance levels coming into play. So the Russell yesterday, guys, we had the low from Monday too low. Now it was a little sloppy in the Russell, but downside targets were basically 1335 and then 1322. That same anchor new low here, guys. The same anchor new low here is at 1346. It is bearish below 1351. If we break above that level, the Russell fails its current short trend. And I do want to show you guys this. I brought this IWM level up last week, talking about how I had no support. So I'm going to go to a weekly chart. So this is just the ETF of the Russell, basically. And I went over this last week. The Russell is super technical on the higher time frame. However, the Russell used to be traded as the TF, which was owned by the International Continental Exchange, and then I think they sold it, and now the CME owns it and it's traded under the ticker symbol RTY. So with all of that being said, there's no charting data for the RTY going past like its inception, which is I think at some point last year. So I got to go out to the IWM. Maybe some other charting platform has it, but IWM is one of the most technical markets when it comes to traditionals on the higher time frame. So the low of 2009 here. Okay, low of 2009, so that's the crash, right? Too high, traded a 50% retracement back. While all of the other markets, they didn't trade their 50% retracement back from that 2000 line, the IWM or Russell, whatever you want to call it, did. We completed the negative 61% profit target at 119 at that time. Now, we went basically completely sideways for, the entire 2014-2015 year, so 2 years sideways at that target before finally pulling back into the next halfway back long. That was at 93.5. We then, again, completed the negative 61.8% profit target at 168.46. So you can see in the crash of 2011, and then you can call it a crash, but 2016, the breakdown in the beginning of 2016, and then that low, too high, 133.51. We actually traded that just the other day. We've dipped in it. The reaction has not been as good. So this 61.8 is going to be like really important moving forward. That's a 124 level. You're going to want to watch. And I just want to bring this up because this move is very, very crucial to the survival of this market. But anyway, it's going to be interesting to see, does this continue to hold? We traded it officially yesterday, so I would like to see a great reaction out of this IWM here, and I totally think, just technically speaking, that is on the table. For headlines today, I just want to give a couple notes. The stopgap funding is going to be the headline rumor today. So, like, does the Senate pass the bill? Yada yada. That's going to be flashing all day. I have no idea what's really going on with that. The House passed a bill for government funding. Now the Senate has to pass it. But those headlines are going to be affecting the market here today. You can guarantee that. So moving on back to the time frame here. Guys, the extension from the low of Monday to low is in play. The 38 and 50% retracements, 1337.3 is that 38% retracement, and the 50% retracement is currently untested at 1344.6. So set your alerts above that. If we break above 1351, then we will have halfway back longs that are valid. Okay. And it's interesting because we are actually holding a halfway back long in the overnight session, but I'm not going to look at it just because the trend's down, even though, it itches. It itches. If we complete through profit targets, we can then maybe look at this as an extension anchor, but let's play the trend till the trend fails. For the S&P 500, we have the low of, let's see, that is the 10th of December to low, guys. Yesterday, this traded off its 38% retracement and went straight to profit targets, 24.50 51 was the profit target I mentioned in the trade room yesterday, and then basically we completed down on those profit targets. We sold 10 points below that, and then we reacted out of those lows. People got, you know, a little too happy in their short positions, and there was a pretty big short covering rally, especially this bar right here, right when the market closed, basically rallied 25 points. That was like as soon as the market closed, we just went straight up 25 points, which is pretty remarkable. The low to low sequence here from that December 10th low to low, the 38% retracement is 24.95 half, with the 50% retracement untested at 25.12 quarter. Both of those levels are valid resistance levels. Okay, if we break above 25.28, the current short sequence fails, and we can begin looking for longs on the hourly chart, and not until then. And one thing I do want to go over that I have not gone over here yet is the VIX futures contract. So we want to keep an eye on this VIX, and we are in the F19 contract. So VX/VX F19 here. As long as the VIX stays in an uptrend, we will continue in a downtrend in the S&P 500. So this is really technical. This is the VIX volatility futures contract for January 2019. You had the swing low of December 3rd to the high of the 6th, pull 50% retracement back. That completed profit targets, and then we held our next halfway back long on Wednesday. Okay, so we actually stuck that on Wednesday. And with us sticking that on Wednesday, and that was during the Fed, we ripped up completed profit targets. So that low from Wednesday to the most recent high, two things you want to watch. The 50% retracement at 22.31. That is going to be the next entry for VIX longs. And then if we break that, if we do not hold above that, that'll mean that the current sequence of longs for the VIX is broken, and then the market could continue to potentially turn around. So you'd actually want to watch for a trend break in the VIX on the Fibonacci sequences to determine when the indexes could pick it up and run. All right, so that's what I got there. The S&P 500 here, charts as is. Moving on to gold, really technical. We ran into a really interesting level here, and this was my call earlier in the year, is that the gold market would rally into the full 50% retracement short in December. We have done that, 1268.3. So this is an interesting level to see if we get above this 1268. If we get above 1268, we probably got room to run all the way up to the prior weekly leg start at 1303. So there could be another leg going into the beginning of the year here. So right now, one of the things I'm watching, there is an extension. I'd like to see a second test of this 1259.8 level. And then if that does not hold, I'm looking for a move down into right here, 1255 half, 1255 half. All right, at or below. Here we are. Come here. Yeah, there we go. Moving on to the Dow, the low of December 10th, again to low, the 38% retracement is untested at 23,118, with the 50% retracement located at 23,268. There is something to be said that all markets right now are holding the prior day's low to high. I mean, the trend to the long side has obviously not been the trend, but there is something to be said about every single index here, the NASDAQ, the S&P, the Russell, and the Dow, all holding the 50% retracement long from the yesterday's swing low, just because that was a pretty big rejection candle. So we'll just see in the morning. There's nothing to do as far as that setup goes unless we go up and rip through these resistance levels. There is nothing to do. NASDAQ, same thing here, guys. We got the low from December 10th to low. The 50% retracement is 63.56. If we break these extensions across the board in the S&P, in the NASDAQ, in the Dow, in the Russell, if they all break, we then finally have ended the current downtrend. We can still rally and sell off from some point, but we will actually have a halfway back long sequence. For oil, there is an extension that got reactivated. This extension we were looking at initially on Tuesday. That extension broke. Halfway back long, then failed. We made a new low and we set up again yesterday. That 38% retracement has a downside target of 44.97. 44.97, and we have come 16 ticks away from completing that. 44.97, we've come 16 ticks away from completing that. So I'm going to set an alert in case we get back above 48s. If we get back above Wednesday's high here, I think we'll have a tradable low. If we get back above Wednesday's high, we'll have a tradable low. All right, that wraps up my morning trade plan here. I'll share these levels with you guys and then hop on the morning power hour. If you have any questions right now, I'll answer them while I'm on the video. But with that being said, Merry Christmas, Happy Holiday, Happy Hanukkah. To whatever holiday you celebrate, enjoy time with your friends and family this weekend, and I'll catch you guys in the power hour. Take care.